Prediction markets are flashing some seriously mixed signals right now. So today we're going to follow the money and see what it's telling us about the future of politics, the economy, and of course, crypto. Let's dive in.
Nearly $30 million. Just let that sink in. That's how much capital is currently riding on a single political question that won't even be answered for another 4 years.
And look, this isn't just some casual poll. This is real money pricing in the 2028 Democratic presidential nominee right now. It's the single biggest bet on the entire platform, which tells you the big money is already convinced it knows where things are headed.
But here's where the story gets really interesting. While all this capital is focused way out on the political horizon, there's another massive bet, over $26 million, being placed on a crypto event that has, get this, only a 4% chance of happening. We're going to break down exactly what that is in just a minute. It's a huge contradiction. Now, if you're finding this kind of analysis valuable, go ahead and drop a like and share.
Okay, so first, let's dig into that main narrative. The market is looking way down the road, and it's putting some serious cash behind who it thinks will be running the country.
So who exactly is the money backing? Well, for the Democrats, it's pretty clear. Gavin Newsom is the frontrunner, trading at a 37% probability on that massive, nearly $30 million volume. And on the Republican side, J.D. Vance is just dominating with a 50% chance, backed by over $8 million in volume. So the big takeaway here is the market is not waiting around. It's picking its horses years in advance. For more deep dives just like this one, make sure you subscribe to the YouTube channel.
All right, now let's pivot. We're going from those long-term political bets to the short-term economy, where honestly, we see the complete opposite, a feeling of extreme certainty. It's a really stark contrast.
I mean, just look at the conviction here. Over $18 million is wagered that the Federal Reserve is going to cut interest rates by 25 basis points. That's 0.25% this December. The market is giving this a 93% probability. This isn't just wishful thinking. This is a huge signal that traders believe the economy is slowing down and the Fed is about to step in.
So the consensus couldn't be clearer, right? A 93% chance of a rate cut, and as you can see on this chart, only a 4% chance of a recession happening this year. Because the market believes a recession is basically off the table, it's pretty much giving the Fed a green light to start easing up. You know, we post charts like this on our X account all the time, so be sure to follow us there for the latest data.
And now for the outlier. Because despite all this confidence in the economy, a truly staggering amount of money is pouring into a super high-risk, low-probability bet in crypto. This is where the whole narrative just splits wide open.
It's really the central question you have to ask yourself. In a market that seems so sure about where the economy is headed, why are traders placing a nearly $27 million bet on a total long shot?
And here it is. This is the bet we teased at the start. Almost $27 million says that Bitcoin will hit $140,000 or even higher this year. The market gives this only a 4% shot, and yet the volume is absolutely enormous. This is a massive hedge against the consensus.
And believe me, this isn't just a one-off thing. Check out this table. There's another $17 million betting that Ethereum will break 5250, and that's only got a 5% chance. What you're seeing here is smart money buying what are essentially lottery tickets, an insurance policy against a high inflation outcome that pretty much everyone else is ignoring. If this is the kind of analysis you appreciate, let us know with a like and a share.
So, what on earth does all this mean when you put it together? Well, we've got a market that is deeply divided. Let's synthesize this. So here's the bottom line. You have political money playing the long game. You have economic money betting on everything being calm and stable in the short term. But then you've got the crypto market hedging for total chaos, betting that the consensus is completely wrong about inflation. We're going to be tracking this split very closely in our next explainer, so make sure you're subscribed.
This is the real conflict at the heart of the market right now. It's positioned for short-term calm, fully expecting the Fed to start cutting rates, while at the same time, it's buying up these massive insurance policies against long-term chaos.
So what does this all mean? Is the market actually stable, or is this just the quiet before the storm? I think the key takeaway is that you've always got to look beyond the consensus narrative. To keep up with our latest analysis, subscribe and drop a like below. And follow us on X for more updates. We'll see you in the next one.